Welcome back to Griffonomics, where we conduct financial investigations to define the risk before we look at the reward. Today, we're diving into Buddhist psychology and how the architecture of the mind dictates market behavior, pulling insights from foundational concepts of consciousness that shape our decisions, often without us knowing it.
Market psychology is dictated by the collective consciousness and the individual's manas, the root of ego and craving. But a trader can achieve strategic resilience and transformation at the base by using mindfulness and selective watering to manage the seeds of fear and greed.
Wow. Okay, that thesis it's a really radical way to frame market dynamics. I mean, for a lot of our listeners anyway, we're usually talking about technicals, interest rates, supply chains.
Right.
But you're suggesting that market movements are fundamentally psycho-emotional. So let's start at that highest level. If the market isn't some fixed external system, but a product of the mind,
Right.
where does the structural source of all this emotional trading actually reside?
Well, it resides entirely in what the texts call the collective consciousness. The sources we looked at they're really unequivocal about this.
Unequivocal how?
The stock market, the value of the dollar, even the price of gold. They are explicitly defined not as having objective value, but as products of this collective mental landscape. Their worth is just a manifestation of millions of people's collective fears and hopes, all aggregated together.
So if the market suddenly drops 5% after some news event, you're saying that drop isn't just an economic reaction, it's a massive, instantaneous psychological mood swing. A collective fear.
Exactly. I mean, think about the enormous scale. You have institutional traders, you've got retail investors, hedge funds, all of them constantly calculating, guessing, speculating.
Right.
And these mass calculations, they create a kind of collective understanding that just ripples through the entire system. And here's where the insight gets pretty sobering. The texts note that this collective speculation often leads to, and this is a quote, incalculable suffering.
You can see that in every bubble and flash crash, can't you?
Yeah, absolutely. The collective illusion of quick wealth bursts, and it just leaves behind this widespread aggregate pain.
Okay, that makes sense for the macro movements, that sort of herd behavior. But now we need to zoom in on the individual trader. The market is full of really disciplined people, yet we see panic selling, irrational greed every single day. You identified Manas as the culprit. Why is this specific part of consciousness such a source of error?
Manas is so crucial because it's the engine of self-identification. In the framework, it's categorized as the seventh consciousness. It's the layer that operates right on top of the deepest repository of the mind.
And its main job is?
Its primary function is this: relentless self-love. It's the energy that constantly grasps at the idea of a permanent, separate self.
What we'd probably just call the ego in Western terms.
Yeah.
But why is its position as the seventh consciousness, why is that structurally so important?
Because it operates in a state of, well, continuous ignorance. It's constantly looking inward at the deepest part of the mind and mistaking the totality of all that experience for a permanent, personal I. It loves this I blindly. It attaches to it fiercely.
And because Manas doesn't see the true nature of things, that everything is interconnected.
Yes, what the texts call non-self, because it doesn't recognize that. This attachment forces it to constantly separate and discriminate between self and not self.
So the market becomes the hostile not self, and the trader's portfolio becomes this vulnerable self that needs defending.
That is the delusion, and this structural separation creates what the texts call a delusion of separation, or double grasping. In trading, this is the root mechanism that generates all performance anxiety, the massive fear of loss. It's not just about the money. It's the fear that the separate self is under attack by the perceived not-self of the market. And that leads to self-destructive protective actions.
Okay, let's unpack that architecture a bit more then. If Manas is this self-defining ego, where do those market behaviors, that ingrained impulse to just hit the sell button during a dip or the greedy urge to double down, where do they physically reside in the mind? What's the storage container for all these emotional habits?
So for that, we have to dive even deeper to the foundation. The repository for absolutely everything is this store consciousness, or Alayavijñana.
Store consciousness.
Right. And you shouldn't think of it as some passive library. It's more like a vast, energetic data center. Every single experience, every thought, every emotion, every action you've ever had, including past successes and past financial failures, is preserved right there as inert potential.
And these potentials are called?
Seeds or biha.
So these seeds are the latent energy of everything, both suffering and enlightenment, fear and peace.
Precisely. They are potential habit energies.
Yeah.
Now, if the store consciousness is this massive database, we need an active operator, and this is the mind consciousness, or Alayavijñana. And that's the center of cognition. It's the part we experience as our thinking, decision-making self.
So the mind consciousness is the one actually making the trades. You called it the gardener.
The gardener, yes. The gardener sows, waters, and initiates conscious actions, that's karma hetu, that inevitably ripen into results, or karma phala. This gardener has tremendous power to choose what to cultivate.
But there's a but.
There is. And this is the downfall of the impulsive trader. The gardener is constantly being misled by manas, by that self-grasping ego. When the mind consciousness acts on that egoic impulse, impulsive habits get established incredibly quickly.
Why so quickly?
Because consciousness is momentarily continuous. One panic decision reinforces the seed of panic, which just makes the next panic so much easier.
This brings us directly to a key actionable mechanism for anyone listening. Selective watering. How does this system explain that? That almost self-destructive habit of consuming negative financial news.
It's the perfect illustration of how quickly the gardener can destroy the garden. If you are constantly consuming alarmist financial news or spending hours checking every small fluctuation in your portfolio during high volatility, you are actively and intentionally watering the seed of fear in your store consciousness.
You're choosing it.
You are selecting that negative seed, feeding it, and giving it the exact nutrients it needs to quickly manifest as this overpowering mental formation that just screams, sell now.
So the intervention begins by just recognizing that the news feed, or constantly checking your portfolio, it's not analysis. It's active cultivation of a negative habit energy.
That's the first step to strategic resilience. We have to choose to water the wholesome seeds. Seeds like peace, clear insight, patience, instead of just continually nourishing the negative seeds of fear and greed. It's conscious choice over raw impulse.
Okay, this is where it gets really interesting for me. Why do traders, even professionals, see a small, benign correction and instantly project a catastrophic crash? Why does our perception go so profoundly wrong in the heat of the moment?
It's because the mind operates mostly in what's called the realm of representations. This is the second mode of perception, and it's different from the realm of objective reality.
Okay.
The mind consciousness projects an image of reality, known as vikalpa, or imaginary construction. And this construction is heavily and immediately colored by those internal seeds of fear and desire that are stored deep down.
So the reality we see is always being filtered through our most powerful emotional patterns, often the unwholesome ones.
Exactly. If the seed of fear is well watered, it dictates the perception. This leads directly to a classic analogy from the text: mistaking the rope for the snake.
Walk us through that analogy in a trading context, the rope and the snake.
Okay. Imagine a market graph showing a normal, necessary, profit-taking correction. That is the rope. It's a benign fluctuation, a structural market movement.
Neutral.
But if your internal fear seed is dominant, your mind instantly projects the image of the snake, the full panic-inducing crash, margin call, total loss. This error in perception happens because we are caught in the habit of dividing the universe into dualities: existence and non-existence, win and loss, life and death.
And when the potential for loss appears,
The fear seed activates, and the mind instantaneously throws the image of the ultimate threat onto what is, in reality, a neutral situation.
and that distortion leads directly to self-sabotage, panic selling. It's the neurological survival flight response, just completely overriding the intellect.
Absolutely. The mind's projection causes that premature exit. When fear arises unmindfully, the person is suffering because they are not in cognitive control. The instruction here is critical. Before you execute an impulsive trade based on fear, you have to pause and humbly ask yourself, am I sure? Am I sure that this benign rope is truly a catastrophic snake?
So how does a trader actually enact that cognitive control? How do you move past the illusory snake? If we can't control the market, we have to control our internal architecture. What's the core strategy for fixing the mind at its deepest level?
The central strategy for achieving genuine sustainable mental control is called transformation at the base, or Ashreya Paravriti. And this isn't just behavioral modification like try harder.
It's deeper than that.
Much deeper. It's defined as a metabolic shift, where the deep-seated seeds of delusion are replaced by seeds of wisdom. This happens gradually as those negative habit energies, like the impulse to panic, sell, or chase a rally, dissipate because they are no longer being watered or reinforced.
That sounds monumental. A complete system rewrite of the mind. So what is the day-to-day methodology a trader can actually use when they feel that spike of fear or greed manifest while they're staring at the screen?
The methodology is the precise application of mindfulness through what's called mere recognition. The instruction is explicitly not to suppress the emotion. Suppression, forcing yourself to ignore the screen or hitting a pillow, that actually strengthens the negative seed at the root.
Because you're still engaging with it. You're giving it energy.
Exactly. So you don't fight the anxiety. You embrace it with mindfulness, holding it in your awareness without judgment or reaction. The specific practice is using conscious, focused breathing, coupled with a stabilizing phrase of mere recognition.
Can you give us this specific practice? What does that sound like?
Sure. When fear or greed arises, the trader just observes the formation and consciously names it. They might say to themselves, breathing in, I know I am anxious, or I have an unpleasant feeling of greed. You're simply noting its presence.
And what does that simple act of noting achieve? It feels a little counterintuitive that just acknowledging anxiety would reduce it.
Well, this intentional recognition acts as a powerful stabilizing force because it creates a gap between the impulse and the action. It robs the negative seed of its power because you're not mindlessly reinforcing the habitual cycle. By observing the formation, you prevent the impulsive habit from establishing so quickly, which allows your mind consciousness to retain control and lessens the grip of the fear. And that consistency over time is what leads to the transformation at the base.
Okay, let's zoom out again to a wider perspective. We're talking about the psychological tripwires that can ruin financial careers. Besides just generalized fear and greed, what are the specific mental formations a trader should be constantly monitoring for?
The majority of active trading errors are driven by highly specific, unwholesome mental formations. The texts categorize 26 different types.
26.
But the four most potent threats to a stable financial life are, first, greed, raga, which causes over-leveraging. Second, arrogance, mena, which is believing you found a secret market cheat code that exempts you from risk.
I think we've all seen that one.
Yes. Third is doubt, vichikitsa, which causes that paralyzing indecision. And finally, agitation, aditya, which prevents stable analysis and just leads to chaotic decision-making.
So if the problem is rooted in this egoic illusion that you're smarter than the system, what's the ultimate shift in view that defeats these formations and leads to genuine long-term stability?
The goal is the profound realization of interbeing, or Paratantra. This means recognizing that market movements, this massive, complex ebb and flow of global finance, are not independent variables to be conquered.
They're what?
They're an interdependent manifestation of countless interconnected causes and conditions. It's the realization of that one is all is one principle operating in finance.
So the price of a stock is an interdependent manifestation of global politics, supply chains, consumer mood, economic policy.
Yeah.
Just an infinite number of other factors.
Precisely. The price cannot exist independently. If even one crucial cause or condition is lacking, a specific piece of legislation, a weather pattern, the resulting manifestation of that price action just remains latent. It doesn't happen.
This sounds like the ultimate insight for a trader, that the notion of a separate, all-powerful self that can conquer or fully predict the market, it's just an illusion generated by manas.
That is the ultimate realization. Recognizing this radical interdependence helps to reduce that egoic illusion that you, the trader, can personally control or accurately predict these vast, complex systems. This insight helps manas the root of self-love and craving, stop grasping at the notion of a separate, permanent self. And that is the definition of true strategic resilience and clarity in decision-making.
That is a masterclass in cognitive control. To bring it all back to the daily practice, the core actionable insight for you, the listener, is this. The path to strategic stability in trading is not found exclusively on the charts, but in managing the internal minefield that store consciousness. You are the gardener. You must be hyper-aware of your mind consciousness, choose precisely which seeds you water through your focus and consumption, and actively release the egoic attachment to absolute control and prediction.
If our consciousness manifests all phenomena, including the market's cycles of suffering and happiness, how much of today's market reality right now is simply a reflection of the collective seeds we have all sown?
Risk defined, portfolio protected.